You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Well, welcome to the show. I'm Don. That's Tom. We're here to talk about something very important in your life. Something that you probably want more of. Something that you probably need to plan better for. That something is money. And it's something we need to deal with better than we do, which is why we're here and want to help you. So give us a call during the course of this hour at 855-935-TALK, 855-935-8255. Share your thoughts, ask your questions. Let's talk about your money and how you can enjoy a better future by managing it properly. 855-935-TALK, 855-935-8255. I hate investment clubs.
Hate?
Hate them. I hate the concept. I don't like it. It's like, and by the way, I didn't mind them for a while back in the day when I thought people could pick stocks effectively and consistently. But you can't. So therefore, if you can't, what is the purpose of getting together with a bunch of people and trying to build a portfolio of stocks actively managed that you're all getting together and picking?
Well, I mean, if you read the New York Times today, part of it is empowerment. Part of it is knowledge. It's gaining confidence, right? The fact that I knew nothing about investing. This is about women, by the way, who are joining investment clubs. I get that you a sense of community. But I guess the question to you, and we've been invited many times and we've spoken to the American Association of Individual Investors, both on the national level and the local level, which we enjoy because it's like meeting with people who have an interest in investing. And the problem they suffer from is not unlike what the financial media suffers from. They need something new all the time, right? You got to have a new idea, or if you just give people here the index funds to own, there's no reason to meet next Saturday, no reason to publish this week. So they got to have a new idea, and the problem is they run out of good new ideas. They throw a lot of new ideas at you. What the article points out is that people feel empowered about their money, about making good choices. The question, I guess, at hand would be, if you didn't attend one of these clubs, you didn't join one, you didn't do all that, where would you get that knowledge so that you could make good decisions about your money, especially the investing part?
Maybe on Talking Real Money?
Well, okay, other than the self-serving answers.
No,
sir.
That's the correct answer. But you know what bothered me? I was reading this article, and an investment advisor helped start one of these groups with 2,000 members. And this
Shocking.
investment advisor, which I think is I'm using it a little loosely. She says, get this, quote, by focusing so much on the emergency fund and the mortgage paydown and the kids' education, women are being steered into shorter-term, lower return investments to the detriment of longer-term, higher return investments that can build great amounts of wealth. She's talking about buying tech stocks and growth stocks. She's talking about speculating.
Yeah, I mean, that's one of the things I think from the article that they end up buying, what is it, Apple, they end up buying Disney. I mean, these are not companies that are some hidden treasure that no one else has found out. They're rather well known. There's a certain shipping firm that sells a lot of stuff called Amazon. I think they had on their list as well, which has been really
those are the
good
hot,
performer.
Those are the hot stocks every investment
Everybody knows.
Everybody knows. Everybody out there, and I don't think that these are good for you. I just really don't, except for a social environment. But don't if you're trying to pick stocks, I think you're not learning to manage money. I think you're learning to gamble. It's a lot like a grown-up version of the stock picking game in school, and that's bad for you, I think. 855-935-TALK is our phone number, and we'd love to take your calls, but we can't take one right now because we just don't have enough time.
No, we don't. And I do want to mention before we go to break that another piece of education we have coming up on Cinco de Mayo is you, Don, myself, and the great Paul Merriman are going to be doing a webinar.
Tres amigos.
Tres amigos on bearing the bear. How to deal with this, how to take care of your money, how to make sure you're going to be okay in the long term. It's going to be a great, just having the three of us together again to do this is going to be fun. So that's noon. That's a webinar. It's free, but you have to go to talkingrealmoney.com to sign up. And
it's actually
we'll
interactive.
sell that one out too, by the way.
It's interactive. It's free, but yes.
It's free. We will sell that one out because a lot of people like Paul. So take advantage. Go to Talking. Oh, you're going to be bad.
They don't like us?
Apparently not. TalkingRealMoney.com. Click on events. Join us on Cinco de Mayo for the Three Amigos. Be a great event. I guarantee that much.
And give us a call right now at 855-935-TALK, 855-935-8255. Better than an investment club, and a lot more information.
Tom and Don are talking real money.
Last month, the bear struck hard. And then it backed away. But its return is inevitable someday. We just don't know when. That's why you need to know how to make bear markets more bearable with me, Don McDonald, and my amigos, Tom Cock and Paul Merriman. And what better day to get the three amigos back together for this special class than on Cinco de Mayo? So join us on May 5th online for a free event, How to Make Bear Markets More Bearable. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com. If this past bear market scared you, you probably don't have the right portfolio for future market declines. So spend an hour with us and discover the scientific approach to building wealth through good and bad markets without buying expensive annuities. Get the knowledge you need to battle the next bear with Paul, Tom, and me at this free class, How to Make Bear Markets More Bearable, on May 5th at noon via Zoom. There are a limited number of seats available, so reserve yours now at TalkingRealMoney.com. That's TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Can I add one thing here?
You snuck that right in. I'm getting ready to start.
I know. I jumped in. Here's the thing. We were kind of being serious about education. And if you do go to TalkingRealMoney.com, we have videos up there that are pretty simple. And if you don't want to just listen to us, you can go to PaulMerriman.com. He's got some pretty simple to just learn the basics. You don't need to learn.
You couldn't wait to say
stocks.
that?
Well, I just didn't want to forget. I can't remember.
Oh, yeah, that's getting bad.
It's bad. It's really bad. So, anyway, take advantage. And all that stuff's free. It does not come with a cocktail or empowerment or friendship, but I think it's better than going and learning the wrong things.
I don't know. If you send an email to tom@vestry.com, there could be a friendship awaiting.
There could be a lot of empowerment there.
And, well, not much empowerment, but
okay,
he'll come over to your house with a bottle of disinfectant. Shoot a video.
Oh, we're going to go there, huh? No.
Even my wife said she didn't understand it.
Well,
I'm putting it up on the web. I'm putting it up on TalkingRealMoney.com.
Do not put that on. It's a private.
It wasn't that kind of private. 855-935-TALK. That is our phone number. We'd love to talk with you. Really, we would. Even though he's kind of strange. Sam, you're up next. Welcome to Talking Real Money.
Hey, Sam.
How are you?
Good.
Hey, question. I called a few months ago about RMDs, and my question to you was, what is your philosophy on that? Do you take it at the beginning of the year? Do you cost over each month? And you said at the end of the year, and I'm curious if you've changed your philosophy after what has just happened.
Not really, because, again, generally, stocks. I know you're going to say it hasn't been this year. Generally, stocks have go up over time. So that means the longer you leave the money you have invested, the more you've made. That's why But everybody does by the way, our clients all do this differently. Some take them every month, some take them every quarter. And of course, this year, no one is required to withdraw money from their qualified accounts, their IRAs or 401ks.
Right. I'm still 2 years out. It would have been this coming year, but because of the new law or the new 72, that helped me quite a bit.
Indeed. So, I mean, the only reason that we say wait is just because over time you've made more money by having it invested longer. Nothing more, no other great trick than that.
Yeah. It's not a strategy per se. It's just a common sense thing because you give yourself, generally, markets go up more than they go down. They have
more
to.
Exposure. Yep.
And it just gives you a longer period of exposure to those market forces. It won't always work in every year, but you can't play that game because we don't know what is going to happen in any given year to come.
Right. Okay. Well, thank you very much again.
You're very welcome.
Thanks for listening.
855-935-TALK, 855-935-8255. And Jay, it's your turn. Welcome to the show. John? Oh, I thought it was Jay. Oh, John, welcome to the show. Hi, John.
Hey, guys, how are you?
Good. How can we help you today?
Hello?
Yes, sir. We're listening.
Oh, you can hear me?
We can indeed. Yes.
Anyway, hey, I have a question about our family trust. My wife and I went in and got our will updated, and we were advised to put everything in the trust so if one thing was to happen to one of us, then the other spouse would inherit. So is this a good thing or a bad thing?
Well, okay, so generally a trust is, we're not lawyers, by the way.
We need to start with that because...
Yeah, we know a lot of them, and we work with a lot of them, but I'll just make it personal. I mean, I have a trust so that if anything's left, it will be handed out in a way that will make more sense both from a taxation standpoint and from the complexity of my life due to the fact that I've had a couple of marriages. That's the reason that I have it. So if people simply setting up a trust in terms of tax strategies, then that's a one-off. There isn't one right way or wrong way, I would say. Don?
No, I agree. I think that it's the trust. That's one of the nice things about trusts is that they are established to fit specific parameters. There's generally no one-size-fits-all kind of a deal. But if you have a good attorney, a good elder law attorney, they can be a very good way to transfer assets cleanly, quickly, and less expensively.
Does that help?
Well, hey, thank you, guys.
No, thank you.
You're very welcome. Thanks for the call. 855-935-TALK, 855-935-8255. And estate planning is a big part of the whole process of building a financial plan. And that's why we work very closely with estate planning attorneys, with accountants, with lawyers of other types, because you need access to all kinds of information. And
it takes more than one person really to have a proper retirement. I'd put it that way. And
that's a big part why also at Vestory we've created our teams, because we find that our advisors have differing strengths and skill sets, and this is a great way to get more of a collaborative environment. So it's worked really well. 855-935-8255. I don't know. I don't pay that much attention to them.
I was waiting for some smart answer. You gave the number, right?
Well, we've got people who are more people. We've got people who are more cerebral people. Mm-hmm. They all know the basic tenets and beliefs that we subscribe to, but they all have different talents. We've got people who are numbers people, data people. They just thrive on that. And then we have the relationship people. And when you're dealing with an advisor, this is what's so important about an advisor. Wherever you get your advisor, this is the important part of an advisor. It's not just the data and the particulars of the portfolio construction. It's the managing your emotions and keeping you from doing things that are detrimental, like we mentioned earlier, moving into a stable value fund because the market went down, although you said it's going down. You can't do things like that. And something else interesting, we just discovered recently how much money, one, how much money is flowed out of mutual funds, and two, how much people's risk tolerance changes when the market declines. I've been saying this for ages. I said, if you took a risk quiz, one of our risk quizzes at talkingrealmoney.com, and you took it during the bull market, I bet if you took it today, you would find that your risk tolerance has declined in most cases. You should take a risk quiz during those markets that feel the worst rather than feel the best, because our brains play tricks on us.
Well, they do, and you can clearly see this. There's a couple of industry publications that we read. One of them pointed out that about a year ago, the confidence was very high in stocks, about a 60 according to their score today, 29.
Oh, that's
And by the way, your mind should be telling you the exact opposite, because the likelihood of stocks will go up from here is much greater than it would a year ago.
Right.
It's a fascinating thing.
All of you who are saying, well, the market is at new highs, well, now the market's at lows. You should be happy. 855-935-TALK. Call. We're here to talk with you.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We're glad you're here. We hope we're helping. We really want you to have the right plan, the right attitude, and there's a lot that goes into this. So give us a call at 855-935-TALK if you need a little help getting the financial part of your life in order, because it is complicated. You can't just go to your friendly neighborhood stockbroker and say, hey, build me a portfolio, because that's one. Well, they can probably do that, but is that all you need?
And most people do need more than that, Don. But I want to get back to what you mentioned a little earlier, but not necessarily just about our advisors, but any quality registered investment advisory should have depth to it, right? You mentioned that we have advisors, some who were more people,
Right. People.
And more analytical. And so we have some depth there, so people look at your situation and give you varying opinions. But here's the important part. Number one, if you worked with us, you get a consistent experience around not just how you get treated as a person, but around the investments, the rebalancing, the distribution, all of that. So that, for example, when somebody leaves or leaves the industry or retires, the next person in there isn't going to be a change in the investments, the style, any of that. That is completely opposite of a brokerage. For a stock brokerage, yes, if you got a new broker, they come in and say, well, you don't want to own those American funds. You're going to own these Ivy funds because they're far better. We're going to move everything from here to there. That's not the approach you want. That's not fiduciary advice. That's not in your best interest. Frankly, it's in theirs. And you do want a firm that has a set approach today, tomorrow, and well into the future. By the way, even when Don and I leave all of this, not in this business anymore, at some point,
I don't want to leave.
That I can guarantee.
Don't make me go.
Everything the way we manage money will continue. That is not going to change.
No, as a matter of fact, ooh, that leads me to something else. Thank you. We don't play the fad game. We really don't. We are very, very hard to convince about new investments. And somebody waltzes in saying, oh, we've got the latest thing. You really want to get this? For example, recently, a lot of funds that we respected, pretty much past tense, got caught up in this whole alternative fund strategy. For example, there's a fund called Stonebridge U.S. Hedged Equity. It's supposed to be a way to reduce the volatility in your portfolio without increasing with a decent return. It's supposed to give you return and safety, and they charge 0.5% a year, which we think is way too high for what they do. But they claim to be able to do something that sounds almost magical. And I did a little comparison. This is a fascinating comparison. That Stonebridge U.S. Hedged Equity Fund, 0.5% a year in costs. It's Average annual return for the last 5 years, which includes some good markets and some bad ones, is 3.25% per year.
Yep.
And I compared that. This is a U.S. fund. I compared that to the old way of hedging, which is just a balanced fund. At 0.07% per year, that's the Vanguard Balanced Index.
7 basis points.
7 basis points as opposed to 50 basis points.
Yeah, pretty cheap.
Its average annual return over the same period, over 6%. Almost twice as much. Get this. The measurement of volatility is called standard deviation. The lower the number, the more volatile or the less volatile the fund is. Stonebridge, with its 3% return, had standard deviation of 9.74. That's pretty stable. Vanguard Balanced, 9.4.
Interesting to say. And by the way, is Stonebridge, there may be a liquidity issue.
Stone Ridge. I use this fund on purpose, the U.S. Equity Fund, because it is a daily traded mutual fund.
Because they have others, I believe, that are.
They do, like Lendex that is not. But this one is. And you see, it's a gimmick. I don't care what these people say. We have research that backs this up. You don't have enough research to back that up. You've got to stick with tried and true, sensible approaches to managing money. There is no trick.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
And every single Saturday, we hang out together with you to take your calls and answer your questions and try to make this process of dealing with money more understandable, simpler, saner, safer, and more profitable. So if you want those things for your life, you need to call us once in a while, particularly before you do something you might regret. It's free. Why wouldn't you call? 855-935-TALK, 855-935-8255. Or apparently somebody figured out my email address, which isn't really hard. Don@vestory.com.
Yeah, our email address
They're really
very
easy.
mysterious.
Ridiculously easy.
Yeah.
Don@vestory.com. And sent a question in.
Okay.
Which I never expected. So
I know.
I'm going to give you the question now. Are you ready for the question?
Well, I don't know yet.
All
We'll
right.
find out.
Well, I don't know. It's going to be a tough one for you. Hi. That's how it starts.
Hello.
Sorry.
It really is funny.
No, your expression when you said hello, that was what made me laugh.
Oh, okay. Well, glad I could humor you.
Better than the video last night.
Oh, come on. That video got well reviewed.
I don't know by
not
whom.
by you. Many people.
Are you ready? Okay.
Yes.
Should one continue dollar cost averaging through a bear market?
Is that the entire question?
That's the entire question. Told you it wasn't going to be hard. And that's the entire answer?
That's it. Okay, let's
Can you elaborate a little bit, sir?
Yeah, thank you. Let's unpack that just a little bit. Number one, if you're dollar cost averaging, the whole point of dollar cost averaging, you're getting different prices.
Thank you.
So when prices have gone down, you're getting lower prices. When stocks go up, you're getting higher. So that's the entire point of dollar cost averaging. Number two.
Yes.
This goes back to the entire theme of the program. And maybe the entire theme of the program ever.
Yeah, probably.
And before that, if you have a plan that says, here's what I'm trying to do with here's how much risk I'm willing to take, here's how much I'm trying to make, and here's how much volatility I can handle, then all of this that's happened in the last 6 weeks, that's background. It has nothing to do with your plan, because next week it may be something else. So, and dollar cost averaging is an absolutely fantastic strategy, whether it's and by the way, I think for most people, even advisors, having a disciplined, the money's going in, we're investing it every week or every month, whatever it is, you will do way better than the lady who lives next door to you who trades gold.
Well, down the street.
Pardon me. I don't want to get you in trouble. Because the history
She's really
of
rich.
this
She has
shown.
a big house, not like my little house.
Okay. All right. Well, Yeah, I know you live really a tough part of town there.
I do.
But I mean, the point is, we know the people that have a disciplined approach. We know the people that can tune all this out. They just keep on doing what they're doing, end up with a ton more money than the people who don't.
That's
It's
the
not
whole
even close.
point of what is called a discipline. Dollar cost averaging is a discipline. Rebalancing is a discipline. Remain disciplined. Apparently, the questions are now coming in.
Oh,
to
they
me.
found your email
I
address.
found my email address.
All right.
So
Well, that's good.
Coda, who called earlier,
Yes.
go
he
ahead and
hung up on
email
us.
the question.
All right.
I think.
Pardon me.
All right. Oh, this is a great question. Oh, I love this one. Can I take
Is
this
it
one?
harder than the last one or easier than the last one?
It's similar. When investing under $250,000, oh, that's right, they do this. Is Edelman Financial Engine's 1.75% per year
No.
fair?
Is it really?
Yeah, no, it is.
No, that's too much money.
That's ridiculous.
Is it really? It really charges
Yes.
1.75?
Yes, that's on their
anything, I think that's too high.
ADV.
Wow.
That's
Okay,
ludicrous.
the point is, again, what are you getting for that?
I don't know. A
Well,
portfolio.
no, I'm asking Coda. Okay, if it's just a portfolio, then absolutely not. You can just go to Acorns.
No. Well, it depends on Coda. I need to know a
Sure.
lot more about Coda.
Well, yeah, no. That's what I'm saying. If it's just the portfolio,
But,
though.
I mean, if you're right at $250,000, I guarantee you can find an advisor who will charge a lot less than that. If you
Well,
are,
here's another point.
Yes.
Well, you're going to start seeing a lot of advisors who their minimums will go down here and soon.
Yeah, probably.
It's not unlike the real estate industry, how everybody becomes a real estate agent when the market goes up, and then the number of them goes way down when the market goes down. Same thing happens in our business. People, our minimum now is $1 million. A lot of minimums are going to go down now because the market has gone down.
But
So-
no, 1.75%
No,
per
that's too
year
much
is an
money.
outrageously large amount of money. 1% is max. And when you have a smaller portfolio, you may not need the ongoing guidance that an advisor
We'll give you
provides.
2 funds in a minute.
Yeah, we
We'll
could just give you a couple of funds, or you can go to talkingrealmoney.com and get the list of advisors that we think are worth looking at. We'll be back.
Tom and Don are talking real money.
Hi, Don here. Technology's allowed me to work remotely for the past decade. Heck, I even do this show from Florida. So at Vestory, we recognize the power of technology to provide information and guidance when you need it from anywhere, even from our advisors' homes to yours. When the markets seem to be rising, actually have risen, investing feels easy. It's times like these that separate the real investor from the players, and most advisors, well, they're players. At Vestory, we build portfolios for markets just like these and provide the ongoing counseling needed to remain disciplined through worrying times based on decades of scientific research, not seat-of-the-pants hunches or guesses. So if you're worried about your portfolio's future, you need a 100% fiduciary advisor like us to guide you through the troubled markets based on your needs, situation, and personality. Go ahead and set up your appointment with a Vestory advisor right now. Call 800-386-3004 or visit vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Our number again is 855-935-TALK, 855-935-8255. Those big fees have done wonders for Rick, though. He's
Yeah,
looking
worked out
good.
well.
I see a picture of him, and it's estimated
Smiling,
that
no
his
doubt.
net worth is about $160 million. So he hasn't done badly. I mean, he's no Ken Fisher.
Well,
Fisher's a billionaire, isn't he?
manages like, oh, yeah.
Well, no, but Edelman and Financial Engines, I think they're almost as big as Fisher.
Yeah, but Rick didn't raise all that on his own the way Ken did.
Yeah, no, it was through Financial Engines in large part.
Yeah,
but-
Ken Fisher.
You know, it's funny that he merged with Financial Engines.
Yeah,
They approached us, didn't they? Didn't we
They
talk
did.
to them once? Yeah.
we did.
Yeah.
Yeah. They're out in the car waiting. I told them I'd be out after the show.
They already bought Rick, or Rick bought them, or they
so they
merged,
don't need us
want
anymore,
us.
is what you're saying? Oh, okay, we're small potatoes.
We're a piker by comparison. I mean,
That is very
they
true.
manage.
That's
They
true.
manage a fortune. 855-935-TALK. That's our phone number. 855-935-8255.
Can I mention a couple other things?
Yeah.
Because it's on people's mind to some extent. The NFL draft which I know you're following, right?
What does
Because
that
of your
have to
team.
do
You're
with
even
money?
wearing orange. Everything to do with
It's
money.
because I ran
find it
out of all my
fascinating.
other T-shirts.
I was wondering. Somebody find Don a shirt with a collar on it. Good luck. Here's the thing.
I work from home.
I find it fascinating
Yes.
that there was somebody, I think it was the first day of the draft. That was a couple of days ago, right? I can't keep Wednesday,
The
Thursday.
draft
Anyway,
Thursday.
whatever it was.
Thursday night was the first day of the
Okay,
draft.
Thursday. Someone tweeted out to these people that are, getting these, if you're in the top.
By
50
the way,
people
can I
drafted.
interrupt?
Apparently so.
I am so proud of you for using the word tweet in a sentence. Here you go.
Thank you.
Go ahead. Someone
Thank you.
tweeted. Yes.
I forgot completely what I was going to say now.
Someone
No, I'm
tweeted
kidding.
something.
They tweeted, but what they tweeted out was to the people that are getting drafted, that are getting this windfall.
Mm-hmm.
They said, okay, be smart. Number one, all those millions you're signing for, you end up with like half of that by the time you pay taxes, your agent, et cetera, et cetera. Number two, your mother does not need a new $1 million home, nor does she need to be driving a fancy car.
That's not what I heard Mom whispering in the living room into the son's
but
ear.
number three, here's
Honey,
the other part.
You know that house I want?
I've been looking
I'm
at
getting
for
it now.
while I took care of your PPJ every day when you had practice after school. Number three, do not go out and find one of your friends or friend of friends who's going to give you advice on money. Because those people, this is what happens time immemorial to these people.
Yep.
They think, I got a friend and who knows how to trade gold or do whatever it is. No, the NFL, by the way, is vetted, and I think done it pretty well. There was one person who got caught doing something a few years ago. But they have vetted advisors that they can recommend to you that are fiduciaries that will take care of you properly.
Right. But
Good advice.
There's always a friend of a friend. My friend from college, he's like a hedge fund manager who went out on his own
man. I know.
and let's see, John Elway got ripped off by a Ponzi
and it's
scheme.
always Ponzi's or restaurants.
Mm-hmm.
They're always doing the restaurant thing. This is a time to make really good decisions. And by the way, as you know, the average player in the NFL lasts 3 years or some tiny little number.
Yeah, what you should
most of them don't even
probably
get the
do
second contract.
is take half of your money that you get, the part you get to keep, take half of that and put it into VT Wax and tell everybody else to go away.
Well, and we not vestry, but when I was at Merriman, we managed a young man's money who was an NBA player, and he did exactly that. He took half of everything and put it away
into
for the future.
good
Just
investments.
Didn't touch it.
Yep.
Didn't even touch it. I thought when you're 21 to do that, really great. And he had a lengthy career. I don't think he's playing any longer, but that's the kind of thing you should do. But this is a point where people make horrible decisions. They think they're going to have all this money the rest of their lives, and you don't. And
So
it's
all
true of
you
all of
kids,
us, by the way.
all you kids who got drafted from UW,
I think there's only one right now, and he didn't get picked till the fourth round. So I don't know. How much
somebody
money
else must have gotten somebody. No, just one. You may be right.
So far, I could be wrong.
But if this is your first time listening to a money show, because it's really your first time having a lot of money, there are good financial advisors out there.
Yes.
There really are. There are 100% fiduciary financial advisors. Interview them. Go get our advisor interview form at talkingrealmoney.com and make them fill it out and sign it.
By the way, there's another thing I would add to all of that. I don't like the idea that you give someone else in your life the ability to write checks.
Like your manager or something similar?
Yeah, I've seen this as another continuing, I didn't know because he always wrote. I think you should keep. I know you're busy. I know it takes time, but in today's world, once you set things up, it's pretty much a push button to send everybody money. I would suggest that anytime you come into a windfall for whatever amount, don't just say, I got a guy who writes all those checks for me. I think that's a risky way to have your money handled.
And, by the way, since we're giving out football player advice, financial football player advice.
Yes.
I would like to advise all of the new Las Vegas Raiders to commute into town from some other place so that you don't live in Vegas, because everybody in Vegas is out to rip you off. It's all about gambling in Vegas. You need to.
You see the shirt I'm wearing today,
You need to
right?
go live in Utah. And fly
see the shirt
in.
I'm wearing today?
Yeah, I see the Aria Las Vegas. Yeah,
I'm going there in June. That's going to be my first stop when we break out of all this.
Yeah, and then when you're done, they're going to call you King COVID.
I'll probably end up staying there then.
Yeah.
No, by the way,
you
where are you on the whole?
You and the mayor of Las Vegas getting together and being.
Where are you on the whole empty stadium thing?
As long as this virus is around, go for empty stadiums.
No, but I mean, it doesn't it. So are you going to watch games where there's no one else watching?
Of course.
Okay.
Of course.
It's going to be weird.
It'll be weird. But I got to tell you, let me actually give you a really good example of how weird, if you do it right, if the environment is set up properly, it can be very good. And I'll use late night talk shows as an example. John Oliver's show, which I love, I found out his jokes are very dependent, the level of funniness, on the reaction of his audience. Without an audience, they're not funny.
Why don't they just use a laugh track?
Yeah, I don't know. The man who's
By the way,
really...
do you know people on laugh tracks are dead?
Okay. Well, you have to be,
so it's
probably.
Kind of weird.
Anyway,
weird.
No, the guy who does it well, though, is Jimmy Kimmel. He can play to nobody and still be incredibly funny. So if he can do it, the NFL can figure out a way to make games really fast-paced and entertaining on their budgets.
I think it's going to be just
on
weird.
their budgets?
Well, that's true. But can you put a person every 6 feet or something, or is that still not going to work?
It would be like a checkerboard of bodies. No. Why did we get on this subject anyway?
Because I love that, and I don't remember who tweeted that, but I absolutely loved it. I thought it was really good.
It was
advice.
brilliant.
Probably the best advice they're getting.
Yeah, it was brilliant. But we know most of them won't take it.
No, they won't.
They won't. They'll do
I'm
stupid
rich.
things.
I got an entourage. I'm going to go buy a restaurant. I got my mom a big house.
It really,
and I got a nice
as
car.
a matter of fact, it would be so nice if the leagues would automatically set something up in the contracts that said, hey, here's the deal. We are going to hold back X. And
they do now educate them. I know that.
They educate them better, and I think that's awesome.
Yeah.
I think that's amazing. Remember, you can call us 24 hours a day, 7 days a week with your questions, or you can send them in. Just give us a call at 855-935-TALK, 855-935-8255, anytime, and leave your question, or send them in via talkingrealmoney.com. Hit the contact form. It's easy.
Tom and Don are talking real money.
And I just wanted to let all of you know who sent in questions. I will, if you'd like, I'll answer those on the podcast. So listen to a future podcast at talkingrealmoney.com. And also, if you are looking for some great advice on how to plan for a bear market, how to live through a bear market, how to survive a bear market, well, we're getting together. Tom, Don, and Paul Merriman again, getting together for a live online class on Cinco de Mayo called Making Bear Markets More Bearable. So sign up for that right now. Go to talkingrealmoney.com. It's absolutely free. We've expanded our seating capacity, as it were, to 300 people. So we've got a lot of seats available. But you need to sign up right now because Paul's going to start plugging it at talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?